Hello friends, I am Aaditya Jain and I am your CA Final AFM faculty. So RTP September 2025 is out for CA Final AFM students. I am providing free video solution of this RTP in 100% English. I have already recorded the same topic video in Hindi language. You can subscribe my Hindi channel if you understand Hindi. This facility is for all my registered and unregistered students. As you know that I am also providing 100% classes in English language without dubbing, 100% my original voice. So you can avail my 100% class in English also. Only one question which came in RTP is worth mentioning, and that is question number 2. All the questions are already covered in my class. You already know that I am giving you the most extensive coverage of this subject. Question number 2 is based on theory. So I am providing its video solution with this video only, so that you are not required to face and search it in any other place. If you want video solution of other questions which are already solved, then you can mail us. We'll provide you the link. If you want full solution, then you can mail us at pendriveclassbyajc@gmail.com. Please mention you want it in 100% English language. Otherwise, you will receive the other class which is recorded in Hindi. Fine. Please mention that you want the class in 100% English language. Fine, sir. So our motto is learn more, earn more. The more you will learn, the more you will earn. In learning, earning is hidden. I hope that you are preparing well, and if you are my student, if you are my registered students, if you have taken my 100% English lecture, no need to worry. 100% question in exam will come from my material. Thank you so much. So friends, we are now again covering one theory based MCQ. This MCQ came in RTP September 25. So let's start this theory. This theory is based on chapter number 1. In a recent board meeting of N Limited, following financials of N Limited for the year ending 31st March 2025 were presented. Balance sheet as on 31st March 2025. Equity share capital 10% bond, sundry creditors, bills payable, other current liabilities, fixed assets, cash, sundry debtors, closing stock. Income statement for the year ending 31st March 2025. Total asset is 7,70,000. Current liabilities are 66,88,44. Sales is 11,77. Net profit is 61,600. Can you calculate net profit margin? Yes, you can calculate net profit margin. Fine. Let's move ahead. During the board meeting, Director A said that the company can maintain a certain growth even though the net profit margin remain constant and asset increases proportionately to sales, and it distributes 30% of its net profit. To maintain this growth, it will not require any external fund. Fine. This was stated by Director A. What question is asked on behalf of Director A? Director A is talking about it will not require any external fund. It means there will not be any external funding requirement and external growth rate. Fine. Can maintain a certain growth. Can maintain a certain growth though the net profit margin remain constant and asset increases proportionately to sales. So due to this, it can be said that Mr. A or Director A is talking about internal growth rate. From internal sources, company is able to generate sales. So due to internal funds, company is able to generate growth. So it will be internal growth rate. However, many students might think about it as sustainable growth rate, but when we will read Director 2 points, then you will understand about sustainable growth rate. We have already covered sustainable growth rate in our theory book, theory class. Sustainable growth models assumes that the business wants to maintain a target capital structure, maintain a target dividend payout ratio, increase sales as rapidly as market conditions allow. Target capital structure, target dividend payout ratio without issuing equity share. So let's now see. Director B proposed that just by maintaining a target capital structure and without any additional equity and maintaining target dividend payout ratio, target capital structure and target dividend payout ratio as proposed by Director A, more growth can be achieved. So these are the points of sustainable growth rate. So again, there will be no additional equity without issuing additional equity. So there will be no external fund requirement, external growth rate. And this is the point of sustainable growth rate which can be seen from your theory book. Same points are given in case of Director B. Now Director C, though agreed with views of Director A and Director B, but is of the view that in the coming year it is expected that sales is likely to rise by 15%. Hence, if required, we can go for issue of equity share. So here we are issuing new equity shares, bonds or debentures to achieve the same growth in sales. Fine. So here there is an external fund. We are raising funds from external fund. So in this case, in case of Director C, it will be external funding requirement. It will be C, external funding requirement. Fine. Now let's move to point number 4. If we go by the proposal of Director C, then approximately how much funds we are required shall be raised from in the form of equity or debt, assuming that dividend as proposed by Director A is paid out. What Director A is proposing? Director A is proposing 30% payout. Director A is proposing 30% payout. No problem. Is paid out and assets and liabilities are increased in the same proportion as increase in sales. So what will be the external fund requirement? The same question we have already covered in concept number. The same we have already covered in concept number 47, question number 27, business valuation. Business valuation. Fine, we have covered it in detail in external financing requirement question. Same working we will make here also. Same working we are going to make here also. This same question we have covered. Fine. So we are required here to find external fund requirement. So what is the increase in sales? Increase in sale is 15%. Where it is written? It is written in the question itself. In case Director C, it is written 15%. Fine. Total asset was 7,70,000. So what will be my increase in assets? This much funds we are required. If sales will increase, asset will also increase. It is written in the question. It is written in the question. You can see it is clearly written in the question. Assets and liability will be increased with the increase in sales. So we require this much assets, due to increase in sales, but there is also increase in current liability. Increase in current liability will be decreased because we are not required to pay anyone. This current liability increase means we are using current liability as a source of finance. So 66, 88, 44. This is current liability. Increase in current liability is our cash inflow. Cash flow statement we have already covered in class 11, 12, BCom, CPT, Foundation, Interlevel. We have already covered this. Increase in current liability is a cash inflow. So here sundry, creditor, bills payable, other current liability. So all will be added into 15%. This will be the increase in current liability. We will also retain some amount of retained earning. Let's now see what will be the amount of retained earning. Current sales is this and 15% increase in sales. So revised sales figure is 1353550. What is the current net profit margin? Net profit margin is 5.233644,859% is my net profit margin. So what will be my new net profit margin after revised sales? This will be my net profit. This will be my net profit now. 70840 will be my net profit now. Question is saying that dividend will be 30%. Payout ratio will be 30%. Payout ratio will be 30%. So what will be the retained earning? What will be the retained earning? The retained earning is 49588 will be the retained earning. This much amount we can retain internal financing. If money is available in the form of internal financing, better use internal financing first. So this amount also we can have. So what is the shortfall in amount which we can raise from outside source? So this will be the shortfall amount 36212. External fund requirement, this amount we can raise from outside source. The same question we have covered in the class in business valuation chapter. Let's see what is the options given to us. So this is the option 36212. So answer will be D. The answer to this question will be D. So very simple question. We have already covered this question in our class. So no problem at all. We have already covered this question in our class. So there will be no problem in understanding. We have covered theory also, sustainable growth rate. So everything is covered. We just need to apply our concepts and questions and practical point of view in our exam questions. 100% scoring will be there. So friends, I hope you understand this small theory MCQ based. This type of theory you can expect in exam. Again I will refer, you should cover your class material plus all the things which are posted in your group. 100% exam question will come from the material which I am giving you, which I am teaching you. Fine sir. So in future if any more MCQ, theory based MCQ will come, I will definitely make a video on that. Till then, goodbye, take care. If you have any doubt, any problem, you can directly message me in my Telegram user ID @classbyaj. You can directly message me in my Telegram user ID @classbyaj. Fine.